So that is why I've added that to the topics that I go over with CEOs that are seeking to be bankable. Because how you file taxes, again, is a direct result of your business entity structure, as well as other things that we will be discussing over these couple of days directly relate to a legal business entity structure. So let's dive deeper into this. What I want to do and how we're going to discuss it really is going to be under the context of pros and cons of each type of entity structure. Okay. We're not going to just focus on one, but I'm going to give the whole general caveats on the pros and cons for each one. Okay. To help you choose the right legal entity, or if you somehow believe you're in the wrong legal entity, at least have the context of where you might need to go. Okay. Now, as I said before, choosing your legal entity should not just be in a silo or a rush to say, oh, I want to start a business. Let me go down to my Secretary of State or the county clerk and file a business. There are other implications that you need to consider. And like I said, there are tax implications. But the biggest implication, along with tax implications, that directly affect your finances, include the legal protections that you do get in choosing your business entity. Okay. So here are some other considerations. You want to separate your personal and your business assets. And we're going to talk about that in a few seconds. And again, you want to weigh the complexity of your liability when it comes to you operating in your business before you rush down to get your business started. So the choices that I'm going to talk about today they're going to range from sole proprietorship to C Corp. So let's talk about sole proprietorship. Now, sole proprietorship is an entity, but it's you. So, in the sense of a business structure, you operating as a sole proprietor is it. It's you. The pros is it's easy to do, right? You're not, there are forms that you can fill out as a sole proprietor. I'm not talking about single member LLC. I'm talking about sole proprietor. Some states have an actual entity form for sole proprietors, right? But for the most part, sole proprietors are not filling out business entity forms and going to a county clerk house or filing paperwork with the Secretary of State. So proprietors, the pros are you're not doing that. The pros are some people think it's just simple because you're operating under your social. You're going to be filing a Schedule C. It's the basic form of waking up in the morning and saying, I'm going to follow my passion of being a business owner. As a sole proprietor, you don't even really need to have a DBA. Some folks don't have a CBA. They're simply transacting business in their name, just out there on an island as a sole proprietor. And y'all could probably tell by how I'm discussing sole proprietor that is certainly not one of the things that I recommend for my business owners. So let's hop into the cons of that. As you can imagine, my voice lingering on into. So the number one disadvantage of being a sole proprietor is that you're out there on this island by yourself. You have no legal protection should something go wrong in the furtherance of you transacting business. One of the scariest things that I try to communicate with business owners that are sole proprietors is the fact that you have not designated a difference or separation between your personal and business assets. So let's say as a sole proprietor, you've made some organic lotion or butter, or you've created some type of electronic device or anything like that, and you're selling it and it harms a client, or a client has a major reaction to it, sends him or her in the hospital, whatever the case, something has gone wrong, okay, with the product or the service that you have done as a sole proprietor. And now that client wants to sue you, okay? When they sue you, they are suing you, CEO Jane Doe. They're not suing Jane Doe LLC. So let's say that you also have a W-2 job, or you own your house, you own your car, you got a 401k, anything that's considered an asset that has your name on it is now up for grabs when it comes to whether or not this client wants to pursue litigation against you. And that's the number one wake-up call that I hope resonates with business owners joining us today when it comes to what we mean by protecting your assets. There's a difference in when you have an LLC versus you, the individual. And so in that same instance, where something unfortunately went wrong with a product that you made or an electronic product, again, that you were selling, that client will then have to sue your LLC. And hopefully, now we were talking about separating your personal from your business assets. Hopefully you don't have your house tied up in your business, or you don't have your 401k, you still, again, that separation of personal and business transactions and accounts, you're going to hear me talk about the whole time we're together. And it very much starts with your selection as an entity. Okay. We're talking about business credit. Okay. And you cannot establish business credit as a sole proprietor because you don't have an EIN. And let me throw this in here because the IRS actually has EINs for sole proprietors now, right? And so I've had CEOs ask if you could create business credit under a sole proprietorship EIN. And the answer is no, because when you get to a level, it may work for like the basic trades, but when you get to the level that will take you for office, store cards, or American Express and other cards where there's a deeper review of your business credit, will not work. Okay. Let's go on to LLC, which we know is likely one of the most common forms of business entity structures that business owners choose, right? The pros are they are easy to manage as well, believe it or not, especially if you're a single member LLC, right? The paperwork to get started is not complicated at all. You don't have to create a board of directors. Now, some states still require you to do annual reports as a single member LLC. But from the most part, your business documents to form and to operate are pretty easy. But the number one pro or advantage that is different from the sole proprietorship is the tax protection, the asset protection. And you could just recall the example that we just went over as it relates to how things are protected under the LLC in comparison to the sole proprietorship. So there is also, and this is where we really get off into a part of the bankable program that has thrived and picked up lately, and that is helping business owners understand the importance of tax flexibility that you get when you are an LLC. And what I mean by that is your business entity structure with your state can absolutely be an LLC, but you have tax flexibility because the IRS has a filing status called S Corp that can take you to another level of strategy. And we'll talk about that briefly during our time together today. And so the last pro of having an LLC is the professional credibility, right? Like when you are pursuing clients, pursuing funding, You're starting to advertise, and fortunately, or hopefully, you have a website and an email that reflects your business entity. But it gives you that professional credibility when you have an LLC that is professionally named. So there really are some cons to an LLC. There is such confusion, not only with the CEOs, but even in the lending industry as it relates to how business owners and LLCs filing taxes as S corps um, can have the same benefits and eligibility for funding and mortgage loan products. There definitely is some confusion in that. Self-employment tax. Now, this also can go under the sole proprietorship discussion, because when you are a sole proprietor or you're an LLC that has not elected to file as a corporation, you're filing your taxes on a Schedule C. So most of y'all know, hey, here's a Schedule C in my packet. Whenever you have a profit on the Schedule C, you're subject to self-employment tax. Okay, that's one of the cons of an LLC. And the self-employment tax, what is that? So when we're our own business, we're not on W-2, Uncle Sam is like, hold up, they're not paying Medicare and FICA, right? So self-employment tax is our version of that. It's unavoidable. If you have a profit on schedule and on your Schedule C, whatever that number left at the bottom of the Schedule C will be multiplied times 15.4%, which is the current self-employment tax rate. And that's an extra tax you'll have to pay. All right. Sometimes it actually is a challenge to grow as an LLC because, if you, especially in today's world where there's a growing popularity with venture capitalism and new tech startups that are having these different series of fundraisers, attracting millions of dollars, sometimes those business accelerators and those opportunities would love for your structure to be a corporation. So that would be an instance where LLC might not be optimal. So if you're thinking of something in that area, you definitely want to make sure you have researched that. Now, I want to just briefly, because let me tell you something. I can do a whole class on S corp, right? I mean, because it's just it's a never-ending treasure trove of being able to deploy different strategies with your business. But the main thing that I want to cover in our time today, so that you know, is that S corp is actually not a business entity. Okay, it's not a business entity structure. That's another thing that I want you to write down. If you don't remember anything about business entity structure, I want you to write down S corp so that you have a name recognition of that. But I also want you to know that that's not a business entity structure. That is a tax filing strategy that only the IRS can approve. Under the S corp phenomenon, or how you deploy that, there's something else you need to be aware of. The IRS gives you up to 3 years from the date of your formation at the state level. 3 years. It's called late S corp election. 3 years from your date of filing at your state to still request permission to file as an S corp. After that, you will not be able to file as an S corp, and you'll have, if you want to take advantage of other tax strategies, you'll have to actually change your entire business entity structure. Okay, you'll have to convert to a corporation. So again, S corp, I want you to write those things down, because as we spend more time together, or if we certainly work together under the Bankable CEO program, it could be that someone tells you, hey, you're past the 3-year mark, you're going to have to get an attorney, because we don't do business conversions. We sit on calls for business conversions to make sure that the tax implications are properly recognized. But we're going to tell you, you're going to have to get an attorney to convert your entity structure. Okay, so let's talk about C corp very briefly. So the C Corp is your all out normal corporation. And C Corps are very complicated in the sense that you do need to have, your board of directors. But what I love about corporations is, the ability to issue stock. And you do have some level of that with S Corp. I should go back. If the IRS approves you for S Corp filing status, you do get 100 shares of stock that you can use however you choose to raise money. With a corporation, it's unlimited. Okay, it's unlimited. All right, now the other thing about corporations is they last past the CEO. If you pass away or something, like corporations are just perpetual, right? So you can pass that on, the structure of your corporation. You pass that on to your children or whoever you care to pass that on to. But like I said, forming a corporation typically it's very costly and perplexed. So you absolutely want to have a team of an attorney and a tax numbers person, accounting bookkeeper, to make sure that when you go into that entity structure, you understand all the obligations that you have to meet, and just moving forward, how that will affect you in filing taxes, because corporations are known for double taxation. Okay. Whenever you hear that term, it's a corporation that typically comes with double taxation, not an S Corp. All right. So now what I want to do is I want to transition over into another way that we can talk about business entities. And really more so, I want to give you some insight into tax filing strategy with you keeping your business entity structure in mind. And I don't know if you guys recall when this was when President Trump was in office, and there was a lot of hoopla about this $750 that he paid for taxes. Anybody remember that? It was all over all the news outlets. Of course, anything relating to former President Trump's taxes has always been, the talk. But this particular time, and it was towards the end of his term, the uproar was about the fact that he had only paid $750 with his income taxes. So we started getting a lot of questions about, was that legal? Was it legal for somebody who we know, has billions of dollars of income, and they only paid $750? Is that legal? So let's talk about that. All right. And the best way that I like diving into that is under two concepts and helping you understand the difference between two concepts. And those two concepts are tax evasion versus tax avoidance. Tax evasion versus tax avoidance. Now, I try to keep this jazzy and everything because I know y'all's eyes just might be glazing over because we're talking about taxes, but I promise you, these things we're going over today, you take note of them and they are going to absolutely greatly benefit your business. So what in the heck, why is Taliba talking about this tax avoidance and tax evasion, and was the $750 illegal? So let's talk about those concepts. Tax avoidance. What is tax avoidance? Now, it is legitimately reducing your tax liability or the amount that you owe. Okay? Legitimately, avoidance is legitimate. However, if you are evading taxes, now that's illegal all day up and down. Okay? You cannot avoid liability through illegal means. And one of the quotes that I always go over when we talk about this, that is just right on and a cornerstone of the Bankable CEO program. And I found it on Find Law. And it says, many people pay more state and federal income tax than necessary simply because they misunderstand tax laws and don't keep good records. The most common means of tax avoidance, remember we said that's legitimate, is accomplished by claiming all of your permissible deductions and credits. Now, that might have been a long quote, but I hope y'all are following me. Because that, again, you'll hear me saying every time we get together, record keeping. I'll even take it a step further. There are legal tax loopholes. We already know that, right? This $750 very likely was through a tax loophole. We're not here to say it's illegal because we don't know what all he claimed on his tax returns. But what this quote here of legal writers have pointed out that I 100% agree with, the most common means of tax avoidance is accomplished by claiming all of your permissible deductions. How do you do that? By record keeping, by aligning yourself with people who file taxes in an ethical way and educating you along that process as to what you can actually claim. Tax avoidance legally. All right, so since I'm sitting here huffing and puffing at y'all, before we go, I want to make sure that we know some of the common deductions, right, that business owners can take. Now, a common deduction is the home office deduction. Now, we got to talk about that, and I leave it on my content to go over because clearly we have a lot of working from home right now. Even W-2 employee, we have a lot of working from home right now. And especially, last year, 2020, due to our reality of the COVID pandemic. So the IRS actually made an adjustment because for the longest, in order for you to actually claim the home office deduction, you had to have had a mortgage. It had to be a property that you were on the way to owning, right? But the change this last tax season at the top of this year actually allotted for renters and homeowners, okay? And so what does that mean? What's the home office mean? Now, they do have a simple tax deduction with it, but I like to go over the way the formula is calculated because it helps you understand, I think, easier. So whatever your total space is in your home, let's say it's 1,000 square feet, okay? If your home is 1,000 square feet and the office space that you use is 100 square feet, then 10% of your home is business. So that means 10% of your utilities, 10% mortgage, 10% rent. You get where I'm going with it? So the home office deduction, if you didn't know about it, I want you to write it down. Let's talk about the travel expenses. Now, the world is starting to open up a little bit. So we want to talk about travel. Now, let's talk about travel for new business, because I believe this is a commonly missed deduction. If you are traveling to your clients, to new clients, that's a business expense. If you have a business where you're driving back and forth all day, from one location to another location, you're delivering, whatever you're doing, your trips in between these locations, travel expense. I think everybody understands that conferences and seminars, qualify as a business expense, but just in case you didn't, they do as well. Let's see. Oh, this is one of my favorites before we wrap it up. So let's talk about hiring our children or our grandchildren. Okay. So I see this all the time on social media where, people are like, how they jazz it up, like, what's the phrase, what's lit as a business owner? Hiring your children, right? And that's correct. But let me tell you exactly how you need to do that to make sure it's lit. Okay, and you're not going to get in any tax trouble as it relates to this strategy. Okay, now here's the general rule of thumb. All right, because the inflation rate changes with the standard deduction, but I just typically leave it at one amount that I know will be under the standard deduction. So you can pay your children up to $12,000. Okay, up to $12,000 without them incurring, number one, having to file taxes. Okay, and also without your business incurring any extra payroll taxes. Okay, now I do want to get into the age of your children. We do want to have some type of paper trail or documentation that your children are actually performing legitimate services for your business. So we want to make sure you have that. But I did want to go over that in our time together, that you absolutely can deploy that tax strategy through your business in hiring your children or your grandchildren. Crafted an interactive session where you're going to be looking at a financial statement and we're going to be interpreting that financial statement together. The link is on that handout. Okay, so I'm going to give you a few seconds to make sure that you have that handout handy. So when I transition over into the interactive, we're ready to roll. Let's back out, though, into the introduction of why the heck any of this matters. Okay. We know that when it comes to a barrier for the small business community, particularly the minority and women owned community, and our percentages of being approved for financing in comparison to other groups, we're very low. And it doesn't take me to tell you why that may be for your business. One of the most common reasons, though, is that we traditionally have either been completely unbanked, meaning we're cash based, or we have just chosen a manual ledger system. We're writing everything down. We're keeping receipts here, there, everywhere. We tend to just shy away from having a formal system. And all of those things contribute to us being on the sidelines when it comes to funding opportunities. And so we're talking about this together today because remember, I want those two key words, financial statements, to no longer bring you to anxiety, to no longer present this mindset to you that you cannot. So financial statements, having a solidified formal accounting system using a software like QuickBooks, which is what I'm going to be talking about, is what you have to do. Right? We've had all types of real life scenarios here in the last 18 months where the world has changed in the sense of COVID, and most of all the funding opportunities, federal, state, and local, want you to know your numbers. So we can't shy away from it anymore. Now, a formal accounting system allows us to not only know our numbers, and when I say that, I mean knowing how much you're spending, how much you're bringing in, the comparison between the both of those moving pieces, but also to be able to forecast your numbers out into the future. And that's something that, again, if you're not using a formal accounting software, it's going to be a little difficult. It's going to take more time. Let me say that. But most importantly, because I'm just always going to fall back to what I've been doing over the past 15 years when it comes to tax preparation, having a formal accounting system even makes that easier, because really what we're talking about is record keeping. Where's all your data? Where are your receipts? Where are your numbers? How do you fill out those tax forms without feeling scrambled that you have maybe left something off and therefore leaving money on the table? But having a formal accounting system also helps you be a better tax filer. And remember, we talked about the importance of your business entity and how you file taxes, right? And so, in us going a step further, a formal accounting system also helps you be a better tax filer and reduce your tax liability for your business, because you're going to be compliant and all of your moving pieces are going to be together, right? Now, let's pull up that checklist. And what I would like for you to do is I want you to go to the section that is on page 2, and you see where it says the importance of financial statements. Okay, just under that, you're going to see where it says access the sample QuickBooks company here. All right, so when you click on that word here, it's going to bring you to the sample company. Okay, I want you to follow with me on that. When you click on here, you're going to be seeing where it's merely asking you to show you're not a robot. You're on the test drive link. Okay, when you get to the test drive link, you're going to, again, verify however many times they ask you to verify that you are not a robot. Then once you clear all of that, you're going to enter into the dashboard of a company called Craig's Design and Landscaping. I'll give you a few seconds. Again, we're clicking on the word here in the checklist, and that's going to take you over to a QuickBooks login that's only going to be asking you to verify if you're a robot. Once you click through that, you're going to get to the dashboard for Craig's Design and Landscaping. Okay, so now we are lifetime into a sample company's accounting software. And during this session, because we're focusing on financial statements, we're going to run a report, and I'm going to show you how interpreting financial statements, as well as some other operational benefits that come along with these financial statements, is going to prove that an accounting software is just unavoidable. But particularly, I want you to, again, if you wrote down anything from today, and with me constantly saying QuickBooks, is I want you to write down that QuickBooks is not just a software. I don't want it to come across that I'm selling you software. Okay, and we're going to prove it through this interactive exercise, the value of your business having this software. All right, so I want you to follow me. That should have been enough time for everybody to get to Craig's Design and Landscaping. So let's go over here in our left-hand margin over in the black, and you're going to see the word reports. You're going to click on the word reports. This is going to bring you to our report dashboard. And now I want you to go directly to the profit and loss. Now, I want to remind you, we don't have a lot of time today. There's so much that we can go over when it comes to this, what you're looking at right now, this P&L. Okay. But for right now, we're going to do the interactive exercise, which I promise will be more than an appetizer for you to get the gist of where you want your business to go to move towards being a bankable CEO. So in us looking at this P&L, we see that the current date range is January 1st, through today. So we're pretending our sample company. All of this stuff is from the beginning of the year to now. The first thing that I want you to look at, and this is something we dive deeper into for our QuickBooks membership, but I want to throw it out there that this company has customized its chart of accounts. And that's really going to be the key to making sure that your P&L, you look at it, you understand it, plus the underwriters understand it. And when I say customize this chart of accounts, look at the top part of the P&L under income. You can see here where Craig's Design and Landscaping has just, not only lifted that generic income, but they've actually customized their chart of accounts to reflect the actual work that they do. So I'm looking at this P&L. I immediately know they install sprinkler and drip systems. I know they do plant and soil installation. I know they do design. Okay, that's what I mean by the importance of customizing your chart of accounts so that these things that we're going over make sense for your business, to customize for your business. So why is this important? If you came to me and I was an underwriter, or if you came to me and I was your chief financial officer, and your number one question is, Taliba, I don't think I'm charging enough. Right? That's a common question that a lot of business owners, especially starting out, but even as you're growing and scaling, that's a common question that a lot of business owners just struggle with. Am I charging enough? So let's take a look at this P&L here. At the top part of this P&L, what we're going to do is we're going to focus on the line that says sprinklers and drip systems. So you can see here that so far this year, Craig's Design and Landscaping has brought in $138 total for, again, this past almost 7 months, $138. Let's scroll down though. If I continue to scroll down my P&L and I locate the same exact line item, sprinklers and drip systems, underneath the expenses. So you're going to scroll all the way down until you see sprinklers and drip systems under expenses. What's happening here? So I see that they've actually paid $215.66 so far. So we automatically see an imbalance, right? We see that we've brought in $138, but we've spent $215.66. Now, as a CEO, you have the right to say, I'm not alarmed by that. I know exactly why I'm top heavy, right? You also may not even know because, again, you don't have the accounting system. You're just looking at your, online bank portal, which doesn't give you that comparison by category. You may have all your income and expenses when you log into your online bank portal, but it's not until you have an accounting software properly categorized to match your business that you're able to compare your income and expenses in the same category. Now, let's go back to that question, am I charging enough? Now, remember, like I just said, as a CEO, you have the right to not be alarmed right now by the fact that you've spent, roughly $80, $90 more than what you've brought in. But another CEO may say, well, I don't like that. I actually want to make sure that I'm bringing in more than I've spent. So if we go back to the question of am I charging enough, QuickBooks allows you to drill into, and I mean by clicking on that number, $215.66. And when you click on that, you're brought directly to that expense. And in this case, you can see where Hicks Hardware has charged you $215.66 for those sprinklers. The world is yours on this. You can really get tactical with this, right? And you can see I'm so nerd over this because it really sets off light bulbs for CEOs when we're able to look at their data like this. You can look at this invoice, and one CEO may say, I probably need to check to see if I could get these sprinklers cheaper from another vendor. Because what would your cash flow look like if all you had to do was go down the street to another hardware store that sold it for $100? You see where I'm following? You following where I'm going on that? And so in that instance, you might not be ready to uptick your prices yet. But if Hicks Hardware is the only place that you can go for this particular machinery or equipment or sprinklers that you need, like there's no competition, then as a CEO, that may, and I would recommend should, prompt you to determine what your new prices are. And again, we're in business to make a profit. So if you know, no matter what, there's no competition, I have to spend $215.66 every time I take on a job to install sprinklers, I need to charge at least $250 or $280, or you may say $3. No matter what it is your business, you can choose the number that makes you profitable, but obviously still competitive. You don't want to outprice yourself from your clients. But this is the type of data that an accounting system properly maintained allows you to make those decisions on. Okay, let's go back to the P&L. And the way you're going to go back is you're going to scroll up to the top of your screen and you're going to see the small blue words that say back to report. When you click back to report at the top of the page, that's going to bring you back to the P&L. Okay, so let's look at another way that you can interpret your P&L. And remind you, we haven't even gotten to how underwriters or investors are going to look at your P&L. Right now, we're just showing you how you, the CEO, can more efficiently run your business. So let's take a look at pest control services. We see that we have brought in $110 on the P&L by providing pest control services. Now, if you scroll all the way down into that P&L, you see where Craig's Design and Landscaping has not created an expense category called pest control services, right? Now, in this instance, you as the CEO can say, oh, that's okay. I don't need to measure the income. I have very little overhead. I'm making organic spray. It's not an expense I want to track. That's fine. But if you're contracting out pest control services, you absolutely want to be able to measure that to make sure you're getting your money's worth. So again, these are the types of conversations that we would be able to have in working together when you get a customized QuickBooks account reflecting your home care industry business, this works for any business at all. Looking at they're your numbers. So it works for your business. It works for the next business. Knowing your numbers makes you more efficient and helps you answer those common small business pain points. How much am I charging? Okay. Another common question that looking at your P&L and some other data will help you with is, am I ready to hire someone? Okay. Does that trigger anybody? I know we get a lot of questions about that. Another question along the same lines is, how much should I pay myself? These are not questions that are like, what's the hard calculus? It's not that difficult. When you have an accounting software that's properly maintained with your numbers so that you can see, okay, after I've received all this income in, this is how much I have left. So let's go deeper into that. If we scroll all the way back up to the top, we see that the total income, okay, the total income so far for Craig's Design and Landscaping is a little over $10,000. Now let's see how we're doing when all the bills are paid. When we scroll all the way down to the bottom, we're looking for the line called net income. So when we look at net income, how much does it show there for us? It shows $1,642.46. So this is telling us we're in the black, okay? So glass half full, we're in the black. But this has told us also that we've spent almost 9,000 of the 10,000 that we got. So when you're exploring questions such as, how much should I pay myself? Am I ready to hire someone? Am I ready to open another location? Should I increase my prices? All of those questions that probably keep you up at night because you're not knowing when to do these things. I challenge you to look at this sample P&L and recall the very small, quick things that we've just done together, and imagine your business and what we would be able to unlock looking at your numbers. Now, I want to talk about this 1642.46. That's in the black, just like I said. And just in case you don't know, the IRS actually has an expectation that startups, when they're submitting their taxes, are very likely going to have a negative income. They're going to be in the red for the first 5 years. That's actually within the guidelines. So when you have a company that first year, second year is in the black, heck, I don't care if it's $20, you're in the black. Right? So you celebrate that. So I absolutely would celebrate this if this were my client. Because what that tells me is in the first year, they've been leaner in their expenses. But not only that, now we have a benchmark. Now we have somewhere to start from. And so as we work together over the coming months, you're identifying patterns in your income and your expenses. And you're identifying strategies to increase your profit even more. You can set a goal to say, all right, so first year we ended in 1642. Next year I want it to be 3,000. Because you're the CEO, that could be the goal you set. But if you don't know your numbers again, we're operating in anxiety. We're operating in, well, I know I have money in the account, so my business must be doing well. No. Having money left over at the end of the month does not mean your business is doing well. There's a difference between what this says in cash flow, and we have courses on that as well. But in this instance, and us focusing on the P&L as a starting point, getting everybody in the P&L and understanding the value of a P&L, that's where you grow to. Now let me develop a strategy for my cash flow. So the first point is a recap from our prior sessions, and that is you must have a business entity. Okay, so you must have already created a business entity that's an LLC or higher. We talked about that before, and with an EIN. Okay, so business entity with an EIN from the IRS has to be in place before you can build business credit. The second thing that we're going to be talking about, and that is vitally important when you're building business credit, is understanding the importance of separating your personal from your business transactions. And we already talked about that also when we talked about the importance of your financial statements, as well as establishing your accounting software and ensuring that you're only connecting your business checking, business savings, business credit cards, and QuickBooks. The same method applies for business credit. We want to keep our personal transactions, our personal credit, separate from business. The third most important step as we start building that business credit together is to ensure that your business has a DUNS number. We're going to go over that in the session today, what a DUNS number is and how you can acquire a DUNS number. But number 3 is to make sure you have a DUNS number. You have to have that to build business credit. And lastly, and this really is the trickiest part, I have to admit, when it comes to building business credit, and that is you have to make sure that you're establishing that credit with businesses that actually report business credit. That's probably one of I would say the heftier challenges with building business credit, especially if you're doing it on your own or you're not working with a professional. You could be out there spending all types of money, believing that that company is reporting that to your business credit report. You run your DNB or your Equifax or your Experian, and it's not there. So that by far, again, is something that you want to make sure you have aligned yourself with a guided professional to ensure that as you're building your business credit, you're actually working with companies who report that credit. Otherwise, you're never going to see it. So that's the 4 steps. Now, what I want to do is just briefly give us an overview of why business credit is actually totally different from personal credit. And I want to start off with what I think is one of the most common myths. And that is, oh, I have horrible personal credit. I'm stuck. Like I'm not going to be able to establish business credit because I have horrible personal credit. Or, I've done sessions before where our first discovery call, the CEO is saying, I filed bankruptcy. Am I really going to be able to build business credit? And that answer is yes, absolutely, because business credit uses your business's EIN. And so that's why when the 4 steps we just went over, the first one entailed having a business entity as well as an EIN, because that's the way that you keep everything separate from your personal credit. So let's talk about the business credit bureaus. Who can put in the comments for me the 3 business credit bureaus? The 3 business credit bureaus. Let's put that in the comments so I can do a quick quiz to see who knows this. They're called the Big 3. All right, so the answer is number 1 and the largest one, Dun and Bradstreet. That's where we get DUNS from. So the first and the biggest of the Big 3 is Dun and Bradstreet, or commonly referred to as DNB. The second one is Experian. So we all have heard of Experian because Experian obviously has a personal credit component. And the third one is Equifax. And though Equifax is absolutely has a business credit reporting side, they're least commonly used for some reason. So as we dive deeper into which companies report the trades and report your credit history, very few report to Equifax. Some do, but very few. Nevertheless, Dun & Bradstreet, or DNB, Equifax, and Experian are the Big 3 business credit reports. Now, a really kind of nugget, right, in us understanding and leveraging our business credit is understanding the scoring. So in our time together, we're going to be focusing mostly on DNB because, like I said, they're the largest business credit agency. So I want to make sure that I'm giving you your tips on this particular agency first so that we have enough time. Now, you should know that DNB absolutely does look at bankruptcies and liens for the business, right? So if your business has never declared bankruptcy, or if your business does not have liens, then that increases the likelihood of you having a higher score. Of course, any lawsuits against your company, DNB looks at that category, and that's a measurement of your score. And credit card payments and bill payments. Now, who knows the name of the scoring method for DNB, for Duns and Bradstreet? Who knows that? It starts with a P. So their score range is called a PAYDEX score. PAYDEX score. Okay. And the PAYDEX score, in order for you to get one or register one, you have to have at least 3 trades reporting on your Dun and Bradstreet report in order for that PAYDEX to start generating and calculating and coming to the total. Now, one of the other tips I want to tell you, and this is across the bureaus when it comes to bills and business credit, is say that you go out and you get a net 10, which we'll talk about, or a net 30 with Uline or another agency or company that you know reports to your business credit reports. After you make that purchase and pay the bill, it takes like between 45 and 60 days before that report or that positive history actually shows up on your business credit report. So building business credit does not happen overnight. Okay. However, there is a strategy to it. And I've just given you a little insight as to how to get started with DNB and getting a PAYDEX score. Is you want to have at least 3 trades. Okay. Now let's see. We're going to go over a little bit on Experian, because Experian is the second popular. And just like Dun & Bradstreet, of course, Experian is going to look at any public records for your business. All right. They're going to look at financial history also. If there are court judgments against your business, and this is all, I'm sure, not rocket science for you, because these are the same caveats that are weighed in various methods on the personal side. But of course, it still also comes through on the business side. Now, who can tell me the range of the scoring for Experian on the business credit side? And I love asking this question because the range, most people, if you're not familiar with business credit, you'd be surprised that the range is so drastically different from the personal credit. Who can put that in the comments for me? The range for the Experian business credit. Okay, so here's the answer. It's between 1 and 100, right? So a lot of people will look at that and of course, if that was your personal credit score, look, is that even possible on the personal credit score? You know that you have problems if that's what it is on the personal credit score. But on the business credit side, if you have a 100 Experian business credit score, you're in good territory. Okay, you have a very strong business credit score with Experian if that is your score. Let's look at Equifax. So like I said, Equifax is probably the least popular, least used of the big 3, but they definitely do exist. And we have located vendors or companies that actually report to Equifax. And I will say that Equifax is definitely, their scoring is definitely all over the place. It's not something you're going to have at the top of your head just because they have so many what we call indicators. So the main business credit risk score, the main indicator, is so weird. It's between 101 and 660. So it's so nuanced and you'd never guess that. But that is the main one of the indicators when it comes to Experian and the range of score that you may see on your business credit report. Now what I want to do, and this is going to be very important, we're going to put the links in the comments section. And I also will make sure that it's in the handouts that you are receiving. Now, we talked about those 4 steps, okay? Business entity, right? We talked about separating personal from business. We talked about getting a DUNS, right? Now, what you also have to do is you want to be able to see if you actually have business credit already reporting. As I've worked with business owners over the years, they're usually shocked when they get a NAV account and they run their business credit independently with either of the reporting agencies, and they see something already on there. And this is where I have to throw a little real life in there. People do steal your business identities as well. So if you don't remember anything that I say when it comes to you working on or establishing the business credit for your business, at the bare minimum, you want to have a monitoring system in place so that you know if someone has somehow got a hold of your EIN and getting business credit in your business's name, because that can absolutely happen. But on the positive side, you want to start with a monitoring system and an account where you can pull at the initial point of the journey. And 9 times out of 10, there's no data on either reports because you don't have that business data. Now, I've partnered with nav.com, and we are putting the links in the comment sections as well as the handouts for you to sign up for a free nav.com account. And with the free nav.com accounts, what you're going to do for me is you're going to go ahead and activate that profile, and you're going to verify the identity of your business. And then you're going to go ahead and see if there's any business credit reporting for your business. You're going to run your business credit reports. And if there's something there, NAV will tell you. If there's nothing there, NAV will tell you that as well. But this is a free thing that you can do as you start your business credit journey. Now, one of the other tips that I also go over with clients that are getting those NAV accounts. Now, in you checking your NAV account to see if you have business credit, you may see that you did, say when you got your business checking account, they offered you a credit card, or you actually have a line of credit or some other loan with a bank. Any transaction like that will automatically generate something on your business credit report. So if you know you've already been doing activity with a bank, then you could have some positive history going on in your business credit reports. And for those folks, I typically recommend NAV's business manager account, not the free account. And that's because you want to be able to not only monitor, but have the ability to do any disputes. NAV also, both with the free and the paid version, NAV also has what I like to say is competition to Credit Karma, but it's the business credit version. So NAV will match your actual business credit score with business credit cards or other vendors that will help you establish business credit. So that's why NAV is really important on building your business credit journey. And again, we'll make sure that those links are in the comment section as well as in the handout section. Another score that's kind of new to the game that I want to go over with you today is called the FICO SBSS score. It's, I would say, maybe 3 to 5 years as far as why I say new to the game in comparison to the big 3, but it's definitely an important one, okay? And that is the FICO SBSS score. This is the score that the SBA uses, right? And we've talked about the funding opportunities that are present with SBA. As you know, those are one of my specialties in creating bankable CEOs, is getting us into those SBA loans. And so the FICO SBSS score is important to know about, okay? Risky NAICS codes are risky industries that will have a hard time building business credit if they are able to at all. Energy, oil trading, pawn shops. Much of the cannabis industry is still restricted. I don't know how much that will change now that states are kind of laying back some of those guidelines. But for right now, in the business credit industry, cannabis industry stores will struggle on building business credit. Those are the restricted industries. And believe it or not, high risk industries in the area of business credit actually have to do with travel agencies, right? Travel agencies or auto recreational vehicles or boat sales are high risk when it comes to business credit. So I threw that in there just because, I want you to understand that while business credit is easy in the sense that you get the EIN, you do those 4 steps. You go through the trades in a strategic order in order to build your score, of course, pay on time. There's still so many different nuances in business credit that can kind of throw you off on building your journey, but it's very much real. It's very much an asset that you can use for your business if your personal credit is challenged. But just imagine, of all the things that we've talked about, if you have your accounting software in place and you have your financial statements in order where you can produce a P&L, you have, of course, your business entity in place, your tax returns, you're caught up on those things. And then now let's add a third category in your blueprint to being a bankable business, the category of business credit, and that being established and that being able to be leveraged when you're applying for different things for your business. And again, the barriers have been broken.
Are you a seasoned business owner who is struggling to get past the 6 or 7 figure mark? The number one reason businesses aren't able to grow is because of broken marketing and sales systems. The marketing and the sales are the lifeblood of the business, and if that system is working, even the most unlikely crappy products and services can make millions. I'm Amy Walker, and I have helped thousands to giving them tangible steps on how to move forward. The best part about this GPS tool is it's free and it takes most people about 10 minutes or less to complete. So stop spinning your...
If you are new to this digital marketing social media space, you may feel like people are talking a whole nother language, but I'm here to help. I am Miss Nina B. Abdul-Wakil, and I am the founder of the Social Media Success Network and the Dean of the Social Media Success Academy. It's the #1 leading training and development organization for new speakers, coaches, and authors to help them understand this whole digital marketing and social media space. So I invite you to check out the information on Social Media Success Academy.
Hi, this is Jason Burke, CEO